Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast, the show that brings you the latest insights, thought leadership, and stories from across the global mining industry. In today's show, I'm joined by Chris Showalter, who's the CEO of Lifezone Metals, the company behind the Kabanga Nickel Project in northwest Tanzania, one of the world's highest grade development ready nickel sulphide deposits. We're going to discuss how the company fits in to the evolving critical minerals landscape, its role in building the Western refinery capacity, and what its Hydromet technology could be a game changer compared to obviously traditional smelting. Chris is also going to share his highlights of the recent feasibility study and the key milestones for Lifezone is targeting over the next sort of 12 to 24 months, and obviously a lot more. So, Chris, welcome to the podcast. How you doing?
Yeah, good, Rob. Thanks for having me. Really appreciate it and look forward to the discussion.
Great. So, as we always start these podcasts off, I just wonder if you can just tell us a little bit about yourself, a little bit about your career, how your career sort of grown over the years, sort of to present day. So, I'll hand it over to you.
No, thanks, Rob. To start out, again, thanks for having me. In terms of your question, my career, my background, so I'm an investment banker by training, spent about a decade on Wall Street with Goldman Sachs before making my way over to Africa to work for a investment bank in Zimbabwe, which is really where I got introduced to metals and mining, very much focused on the platinum sector in Zimbabwe. And then that led to me really, getting into a focus on metals and mining, working with a merchant bank called Hydromet Partners, and then eventually starting to work with Lifezone and the founders of Lifezone. I was introduced to Keith Liddell, the founder, around 2014. They became a client of mine. And then with some of the opportunities in Zimbabwe, specifically on Hydromet application, which we can discuss later, I really saw an opportunity that was something that really drove me to really want to come on board full time. I think seeing the positioning for Lifezone, seeing the direction of the industry and seeing how these new innovative Hydromet processes could be applied to different deposits around the world, I was really, just absolutely thrilled to come on board full time in 2017. And I've been working with Keith and the founders since then. We've been able to list our company on the New York Stock Exchange in 2023. And we've secured the largest, as you indicated, nickel sulphide project in the world, which is really going to be the flagship project for us, demonstrating our Hydromet capability. And really, this is the growth path for us as Lifezone, really trying to identify projects that have impact on the critical supply chain, policy initiatives going forward and how we can unlock those. So, so that's a very, very quick intro.
Yeah. And wonder if you can just give us a quick snapshot of Lifezone as a business and as a company.
Mm-hmm. Yep. So Lifezone, how we're positioned right now, we're kind of one of these innovative hybrid technology companies with assets, specifically the Kabanga Nickel Project. That's really our flagship asset, and that's where a large amount of our effort and focus is right now. We'll talk about that as separately, but what we have as well is really the foundation of Lifezone is the Hydromet capability, expertise, and technology that was developed by Keith Liddell, the founder, and then his partner at the time, Mike Adams, and then we've expanded it through to the acquisition of Simulus, which is really where, what I kind of call our kind of engine room, where a lot of the R&D, where a lot of the work's done, a lot of the piloting we do for all these potential Hydromet solutions for other mining projects as well. So we have 120 global patents, and it's one of these opportunities where we identify certain deposits that might be constrained for either processing complications, whether it's certain chemical compositions that are not conducive to smelting, where we can come in and we can unlock that certain type of ore body or polymetallic, or where there's a deposit that's very far from the port, very high logistics costs, where if you do local beneficiation, you unlock some economics that might not be achieved through a very large supply chain, where it has to be sent around the world to various smelters around the world. So those are the two areas we look to be very opportunistic and very thoughtful of how we can leverage our competitive positioning with the expertise on the hydromet. And really, this comes down to one of the facts that I think the world's waking up to is you can focus on mines, but I think when you look at all the hype around rare earths and all the attention that's getting, it's the downstream, it's the processing and it's the refining that is the hardest to compete with. And I think that's where the West has completely fallen behind. And I think Lifezone as a company, with our expertise, with our know-how to focus on the processing and refining step, to produce fully vertically integrated solutions to new deposits that are important to the critical supply chains that the West is really focused on. That's really what we're focused on, is delivering those solutions. And that's how we're positioned right now as Lifezone.
The mining sector is undergoing a huge transformation, obviously in a number of ways, namely as the world's transitions towards obviously cleaner energy. Besides this obviously growth driver, sustainability still continues to remain important and expected to carry on obviously growing. How does Lifezone fit into obviously this transition?
Yeah, I think it's unavoidable that stainless steel is going to be the prominent driver. As the largest demand component for nickel as an alloy, strengthened alloy. So over 60% of nickel is still used for stainless steel. You're going to see varying 3 to 5% growth rates in the stainless steel demand. Obviously, very much linked to the major economies of the world and their industrial GDP growth rates. But the additional growth trajectory for the electric transition, even though that has tempered in terms of expectations of these very high growth rates, it is still very significant. So you're still seeing 15 to 20% growth rates for a number of these metals. And so right now, by 2035, the demand for nickel is expected to more than double. So there is still a very high component of the nickel demand overall that's going to be driven by the energy transition. And it's going to be supported and underlaid by the core demand for stainless steel. Stainless steel is not going away. And so I think for nickel, what we're providing with Kabanga is we're providing an alternative to the captive Indonesian market. I mean, Indonesia has done they've done a phenomenal job growing their nickel industry, but it's come at a very high environmental cost, and they have flooded the market with nickel. And so they're now at this very important point where they've driven the price of nickel down, and their companies, at $15,000 per ton nickel, a lot of these Indonesian companies are now operating in the red. Some of the research out there, if you read Landon Macquarie, he's saying 40% of the Indonesian mines are now operating at a loss at $15,000 per ton. So we're going to see nickel kind of flatten out. Importantly for Kabanga, we are one of the only large scalable deposits that sits below Indonesia in the cost curve. So we could talk a little bit more about that, but that's how the Kabanga project is positioned. We are going to be one of the most critical sources of nickel with byproducts of cobalt and copper for the Western nations to wean away from the tightly controlled Indonesian market, it's controlled by China, and it has massive environmental degradation that has been a major concern. So that's really this kind of bifurcation of these supply chains that we're seeing play out around the world. Kabanga is going to be able to solve one of those supply chain metals.
Obviously, China dominates refining and processing of obviously many critical metals. How likely is it for Western nations to build an obviously alternative supply chain, and what needs to happen for that to be achieved at the required scale?
Yeah, it's a very complex question, because when you look at some of the various metals, the entire supply chain can be very different for certain metals. So graphite, for instance, is very different than nickel, very different than rare earths. So there are layer complexities for different metals that makes it very, very challenging to catch up and then compete. I think the rare earths story right now is a phenomenal example of how that technology and know-how through the downstream parts of the supply chain and the refining has set them at such a massive head start. It's going to take time to catch up. Nickel is very similar. You have a lot of the Indonesian control, but from a technology standpoint, it's not as challenging in nickel. It's just a matter of getting the new mines like Kabanga in production, and they can be a big target of going into the Western markets. I mean, the West is at a very, very big disadvantage, but they are catching up very quickly. I think when you look at the policy initiatives, we get a lot of support from the U.S. government. They have very, very strong commitments right now to securing the supply chain in terms of their interest in national security. So we are working very closely with the U.S. Development Finance Corporation as a partner in our project. And I think you're seeing a lot of Western support coming through now, but it's a catch-up game. And I think it's, again, as I reiterated at the very beginning, it's not just acquiring a mine, it's understanding the sequence of where that ore goes, where that concentrate goes, where does that matte go, who's refining it. So there are a number of steps in a very, very fragmented supply chain where material can go from a mine, which might be controlled by one country or one, Western nation, but then it's being refined in China. And I think that's still the reality. When you look at rare earths, a lot of the rare earths are still going to be processed in China. And it's weaning off and trying to create alternative supply chains. And that does take time. But what we have seen very materially over the past several years is a very strong commitment to try to challenge that and try to compete.
The US and its obviously allies are increasingly looking to secure reliable, responsible supplies of critical minerals. How do you see Lifezone's role within the, I suppose, broader geopolitical and economic landscape?
hmm Yeah, I think, as I mentioned, our relationship with the U.S., I think what we're demonstrating is the ability for some of these policy mechanisms, some of these funding capabilities that are relatively novel, that are breaking the mold for the Western funding uh, of how they typically fund projects. So, for instance, we're working with the U.S. Development Finance Corporation. And this is public, that we have, we're very advanced in the process of applying for political risk insurance. So if you're the United States government and you want to secure new alternative sources of critical metals, de-risking those projects so they're more investor friendly for investment from dedicated investment funds or other strategics, coming in and having them provide an insurance wrapper product is a way you can de-risk and make the investment decision more viable for the various buckets of capital. And so that's one big mechanism through which they're advancing their policy initiatives. The second is we are involved with the DFC as well and others in terms of the project financing. So the Kabanga project will bring in about $700 million of debt for the first stage, and that will be a combination of government entities like the Development Finance Corporation, potentially some European ECAs, and then also we have an MOU with the Japanese as well, with JOGMEC. So it's really it's trying to pull in these various new buckets of capital that are being released to support these projects. And I think it's the traditional sources of capital have always been kind of debt and very vanilla projects or products. I think what you're seeing in some of these new announcements across, especially the U.S. and elsewhere, is more direct government interaction and invention regarding their capability to finance some of these. So whether it's referencing MP materials and some of the structures that were designed for that specifically, I mean, that was a $400 million, I think, prep share structure coming from the Department of Defense or Department of War. And so it's these novel new products that are being really unlocking some of the ability to secure more projects as part of this broader policy initiative.
Obviously, looking at your portfolio, and obviously an interesting part is your Hydromet technology. What makes your Hydromet technology special, and why does it matter how it does compared to obviously traditional smelting and refining?
hmm Yeah, I think just to start off very simply, Hydromet versus Pyromet. Pyromet is burning things at very high temperatures in furnaces, in smelters, and so it's very energy intensive. It works, but this is very old technology and incredibly energy inefficient. So you compare them with Hydromet, what we're doing is leveraging chemistry. So whether it's dissolving or leaching, it's focusing on water-based solutions and really letting the chemistry do the hard work in a much more energy efficient process. Hydromet's used widely around the world. So whether it's high pressure acid leaching or whether it's another form of even in the gold industry, it's widely used. So what we've done is come up with several novel, innovative flow sheets where we apply specifically the know-how to we started out in the PGM sector. So trying to apply Hydromet to a sector that has traditionally been solely pyrometallurgically based. And so what does that really mean? It means you're replacing bigger, older, energy intensive processes with simpler steps, cleaner, and more energy efficient hydrometallurgy. So it is a process. I think when we look at hydromet versus pyromet, it's hard to compete with installed pyromet that's sunk capital and that does work. It's where we can come into newer markets, newer projects as an alternative. That's really where I think we're going to have the most active success is really when a smelter has become too old or it's a new project and you're looking at a cost benefit analysis of how much would it cost for us to build a smelter. Okay, it's going to be $1 billion to build a brand new smelter in this jurisdiction, and we can come in and do something for 500 or 600 million. So there's going to be a comparative cost benefit, and the economics will drive that decision making. But then there's also the clean credentials being much lower in terms of CO2 footprint. That's one of the strongest credentials we're going to have versus pyromet, and also it's going to be the the ability to do this in a more consolidated, simpler supply chain. So going from concentrate to final refined product within one complex rather than sending it out to various different smelters and processors and other operations around the world. So these are just some of the things that we look at in terms of the comparative analysis of how Hydromet can compete with pyromet.
You recently released your feasibility studies. Just wondering if you can just give us some of the highlights of the study.
Yeah, so we came out with a mineral reserve. So our total ore production is 52.2. Well, in terms of the total reserve classification, the Lifezone attributable, because we're a U.S. company under SK 1300, is about 43.9 million tons, and that's grading at 1.98% nickel, which is very high. I think when it comes to a copper equivalent. So if you benchmark us versus, for instance, Kamoa-Kakula on a copper equivalent basis, that nickel grade would be about 4.1% copper equivalent. So incredibly high grade, which makes Kabanga really an elite category in terms of the quality, the size, and really that drives the economics. So that's why we are positioned to be one of the most competitive alternatives to Indonesian nickel. It's because of the size and the grade. That's just fundamental. And we've demonstrated that. Our team that delivered the feasibility study, we came out with a $1.58 billion net asset value for the project at an 8% discount rate. That gives a 23.3% IRR. So really strong economics, and that's using very conservative forecasts for forward-looking nickel. So conservative nickel pricing, but the grade drives a very competitive economic project, even here down where nickel prices are. So that puts us in a position where I think we'll be one of the only nickel projects going forward in the near term. Some other metrics from the feasibility study: the capex for the project, pre-production capex will be about 942 million. Total capex will be about 1.1, just over. So we're looking at about a $500 million equity component to that in the capital structure, and about just over between 600, 650 on the debt side. So a nice blend. I think we have right now we have Standard Chartered helping us run a process to bring in the round out the equity consortium, and that's I'll highlight that a little bit later. But that's really where we're positioned as a company, as a stock. We have a very big catalyst on the horizon, which is very exciting. So that's something the market's very much looking forward to, and we're very advanced with StanChart to round out that equity group. And then we've got SocGen arranging the financing for the debt side, and that's gone exceedingly well. We've had a lot of interest to participate in the debt side. So projects like Kabanga, when you deliver strong economics like this at the bottom of a cycle, and we're able to still justify and have viable economics to move forward, that's a great position to be in. So with the blue sky, the upside when the nickel prices recover in the future, once the supply correction comes in 3 to 5 years, that's exactly where we want to be. We want to be building this mine, going into production, and commissioning right when the nickel cycle hopefully turns. And I think we have a little bit of foresight on when that would happen, but that'd be more towards the end of this decade, right when we're going into the sale of nickel.
How are you preparing for the scale of execution required if you're looking at obviously procurement, engineering, construction, and operating readiness?
Yeah. So we delivered the DFS in July this year. And so what we've transitioned into right now is, as you said, the execution readiness, all the pre-FID work. We have been advancing the project quite materially. So we have, we've invested, overall over the past, 4 years, just over about 170 million has gone into the project in terms of the feasibility study, all the pre-development work. So there's a meaningful amount of commitment that's been demonstrated to get this on the pathway to production. We've been very successful working with DRA Global, who have been the engineers and partners with us during the feasibility study, and so we are engaged with them in terms of the transition process, in terms of execution readiness. Our teams are actually in Joburg right now as we speak, working out some of the procurement packages. So all the traditional project management pathways have been mapped out. We did raise, when we announced in July the feasibility study, to transition from the feasibility study release to final FID, which we are expecting in Q2 next year. We negotiated a bridge facility, so pretty standard bridge facility to get us from DFS to FID. That was with Taurus Funds, so very well known group in the industry, provide a lot of bridge financing to projects like ours, and so we have the sequence of funding is in place, and I think the teams right now. A lot of the focus will be on the relocation program. We've already compensated all the local community. We've compensated upwards of 14 million in the first stage of compensation, and so now it's really it's local infrastructure upgrades, it's roads, it's getting some of the geotech drilling on path, all the preparatory stages you would expect that lead up in the full FID. But I think as a project, we have undertaken a lot more in the pre-FID phase, and I think that's a demonstration of the confidence that ourselves and some of the other partners we've had in this project see in Kabanga. I mean, Kabanga's time has come. This mine will be built. It's just it's these flagship projects with this kind of grade, and this is the right time for Kabanga, and so we're moving ahead pretty aggressively.
If we look further out, say the next 12 to 24 months, what would you expect to see as your obviously key milestones?
Mhm. Yeah, so critically important for us right now are the two processes I said we have underway. With the most important being the process of Standard Chartered, and we're using their metals and mining team based out of London. So Richard Horrocks Taylor and his team, who are doing a great job engaging a number of potential parties and strategic investors that would partner with us on that equity portion, so the 500 million. So as I said, that's very advanced. We're in final negotiations with the kind of short list of targets that we have been negotiating with. We would like to make an announcement on that in the coming month or two, but that is the next big strategic milestone for us. And I think that is going to be a big indication to the market that, number one, the DFS was robust enough that we have that kind of strong competitive interest from alternative strategics, financiers, and global partners. We've had tremendous engagement with off-takers in terms of the ability to off-take, concentrate for the first stage. And so a lot of confidence has gone into this next stage of the project. So I think milestone number one is going to be announcement of who's going to be our new partnership consortium. That's a big catalyst. So I think for investors in Lifezone right now, I think we are at an incredibly attractive level because it's not pricing in this next stage of the project. So I think people can make a decision based on, okay, is Kabanga a project that will get funded? If so, then I think this is a phenomenally cheap entry point for investors in Lifezone. So I think that is the key play for investors right now, because we have this big catalyst in the horizon. And then I think the quality of the potential partners that will be announced, I think will be something that will instill a lot of confidence to the market that this project is moving forward in the right way. And then once we advance this project, there are a number of other pipeline projects we're working on. The other big project we have that we've been discussing publicly is the partnership with Glencore on the recycling of autocatalytic converters in the United States. So we are finishing the piloting of that project right now at our labs at Simulus in Perth, and that's going to be one of the quiet stories that I think is going to get a lot of attention, because I think we're in a position to really differentiate ourselves and get into a sector that can provide domestic, U.S.-based recycling and refining of metals, and specifically with rhodium being such a target critical metal, we would be in a position to deliver one of the highest categories of concern when it comes to the U.S. supply chain, and do that domestically. So really exciting project. I mean, we're very much focused on Kabanga, but I think what we're going to be doing over the the near term is really identifying these other solutions. And specifically, as I articulated at the very beginning, it's these downstream processing and refining solutions that are going to be the real differentiator when it comes to how can you really compete and catch up. It's not just buying a mine, it's providing how do you get that mine to final refined product and to consumers and to the domestic industrial uses. That's really the key. I think that's where Lifezone is set to have a very busy year ahead with some of the projects we have in our pipeline.
Great. Chris, really appreciate your time sharing your story, telling us about obviously Lifezone Metals and what you're looking to, especially obviously the Hydromet technology and explaining that process. If our audience wants to reach out to you, if they've got any questions, and obviously if they want to follow the story, how can they go about doing that, and what social media platform channels are you on?
Yeah, I think primarily LinkedIn is a very good one for us. So I think they can find us on there. They can find us on the website, and then we have a lot of information on our investor relations section of our website. And then any investors that want to reach out to us that are interested, they can access that through the website. But always keen to talk about our story and the opportunity. I think Lifezone's in an exceptional position right now. I think there's a tremendous amount of value that is on the cusp of being realized that is very valuable to investors that want to take a look at us right now.
Yeah. Well, I wish you all the best for the remainder of the year going into 2026, and hopefully you can come back on the podcast sometime next year to give us an update.
No, we look forward to it, Rob. Thanks for your time today and really appreciate it.
Yeah, no worries. Thank you for listening. Hope you enjoyed the episode. As always, appreciate your continued support. Obviously, as Chris demonstrated, some of the technology that they're using in the critical mineral space, and obviously there's some key bits to take away from what they're looking to do there. So, as always, appreciate your continued support. Please keep sharing these episodes far and wide. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.